The stock market can be a mysterious and confusing world for many people, but understanding the basics of how it works is crucial for anyone who wants to invest in stocks. In this video, we'll take a look at the key components of the stock market, including stocks, exchanges, IPOs, and more. What are stocks? Stocks, also known as shares or equities, are a type of investment that represents ownership in a company. When you buy a stock, you're essentially buying a small piece of that company. Companies issue stocks to raise capital, and investors buy stocks with the hope of making a profit as the company grows and becomes more valuable. There are two main types of stocks: common stock and preferred stock. Common stock is the most common type of stock, and it gives investors the right to vote at shareholder meetings and to receive dividends if the company pays them. Preferred stock, on the other hand, typically doesn't come with voting rights but does have priority over common stock when it comes to receiving dividends. Stock exchanges. Stock exchanges are the places where stocks are bought and sold. In the United States, the two main stock exchanges are the New York Stock Exchange and the NASDAQ stock market. These exchanges are where investors go to buy and sell stocks, and they provide a platform for companies to raise capital by issuing stocks. When you buy or sell a stock, you'll typically do so through a broker who will execute the trade on your behalf. Brokers can be either full service or discount, and they may charge a commission or a flat fee for their services. IPOs. An initial public offering, IPO, is the process by which a private company becomes a public company by issuing stocks to the public for the first time. IPOs are a way for companies to raise capital and to provide liquidity for their shareholders. When a company goes public, its shares are listed on a stock exchange, and investors can buy and sell those shares just like they would any other stock. IPOs can be a risky investment as the stock price can be volatile in the early days of trading. However, they can also be a lucrative investment for those who get in early and hold on to their shares as the company grows and becomes more valuable. When you buy or sell a stock, you'll typically do so through a broker who will execute the trade on your behalf. Brokers can be either full service or discount, and they may charge a commission or a flat fee for their services. What affects stock prices? The price of a stock is determined by supply and demand. If there are more people who want to buy a stock than there are people who want to sell it, the price will go up. If there are more people who want to sell a stock than there are people who want to buy it, the price will go down. Many factors can affect the supply and demand for a stock, including the company's financial performance, news about the company or its industry, changes in interest rates or inflation, and geopolitical events. In summary, the stock market can be a complex and confusing world, but understanding the basics is crucial for anyone who wants to invest in stocks. Stocks represent ownership in a company, and they're bought and sold on stock exchanges by investors who hope to make a profit as the company grows and becomes more valuable. IPOs provide a way for private companies to become public and raise capital, while factors like financial performance, news, and geopolitical events can affect the price of a stock. Congratulations! You now know how the stock market works. Thanks for tuning in. We look forward to seeing you in the next one.